Hello again. So we're in chapter 1 and intro to managerial accounting, and we're going to go over the homework. Now you have 3 problems for homework, and they are very similar. So why would I ask you to do the same thing 3 times? Because I think it's that important that with this chapter, and again, I said this in the other video, we're introducing a new way of thinking about accounting, and we're getting into managerial accounting, manufacturing accounting, which is kind of different than financial accounting was. And I really want you to get good at this, being able to pick out which are the manufacturing costs, which are the non-manufacturing costs, what makes up direct material, what makes up direct labor, what makes up manufacturing overhead, right? You really have to get good at that. It has to become almost second nature. So we're going to do this problem, exercise 8, that's the first one. And what I suggest you do, watch me do the first one, and then try to do the 3 homework problems on your own, and then come back and watch the rest of the videos so you can see if you did it right, or maybe I can give you some tips, clues, whatever, to do that. So let's get into it, right? So we've got this company, Cotton White Inc., makes specialty clothing for chefs. The company reported the following costs for 2018. So they give you a list of the different costs. And they want you to compute the following: direct materials, direct labor, manufacturing overhead, total manufacturing costs, which is just adding up 1, 2, and 3. Prime cost, which is adding up 1 and 2. Conversion cost, which is adding up 2 and 3. And period cost. All right, so what we can do, right, what I did was, now here, this is my solution to the problem. And I made a kind of an outline of each element of cost to the extent that I could, right? And notice for manufacturing overhead, I listed 3 elements: indirect material, indirect labor, and other. Now we're going to see what's the difference between direct material and indirect. What's the difference between direct labor and indirect, right? So those are fine points that we need to get. Now, there's a couple of ways we can do this. One way might be simply just to go down the list and decide where it belongs, right? So, for example, factory rent. Okay, now, this is the first time we're coming across this, and we're going to come across it many times. Any cost that's in the factory that's not direct material or direct labor, it's overhead, right? So let me say that again. Sorry if I'm boring you, right? But any cost that took place in the factory that's not direct material or direct labor, it's part of overhead. So let's put this out here, right? I'm going to say that this is factory rent, 42,000. I'm trying to organize the answer. Again, you know, when you're doing this on Connect, they just have a box and they want you to put a number in the box. But it would be nice to know how to go about calculating the number to put in the box. The next one, company advertising. That is a classic selling expense. Advertising is a selling expense, and selling expenses are period costs. Trying to line this up again. It's no big deal if you don't do it exactly this way. Trying to organize the answer as well as do it. Wages paid to seamstress. Now again, what are we making here? We're making specialty clothing for chefs. The seamstress is a person who sits at a sewing machine and sews, right? So that is a classic example of direct labor. I'm going to put that over here. Now, can you have more than one type of direct labor? Yes, you can, right? And as we go through the problem, you'll see there could be another one. Okay. Next, depreciation on a salesperson's vehicle. Now, as soon as you see that word sales, selling expenses are period costs. Depreciation on salesperson's vehicle. $5,000. Thread. Now, thread is a type of material. So now you got to say to yourself, is this a direct material or is it an indirect material? Now, what's the difference between direct and indirect? Direct is something that's traceable. Indirect either is not traceable or the cost is so insignificant that you wouldn't waste your time tracing it. Well, guess what thread is? Thread is something that's very inexpensive. It's not worth the time or energy to trace how much thread is used on each garment of clothing, right? So I'm going to say here that indirect materials thread $1,000. Right, so far we've done rent, advertising, wages paid to the seamstress, depreciation on sales vehicles, and thread. Utilities for factory. Again, if it's a factory cost and it's not direct material or direct labor, guess what it is? It's overhead. So let's list that here. Utilities, right? Okay. Cutting room supervisor's salary. Now, when you hear salary, you say, well, gee, is this direct labor or is it something else, right? Does a supervisor sit at a sewing machine like a seamstress does? And the answer is no. So a supervisor's salary is never direct labor. It's indirect. Now, can we have more than one type of indirect labor? Yes, we can. Yes, we can. Let's say supervisor salary, right? And that is going to be $30,000. Okay. President's salary. Does the president work in the factory? Probably not. So that's going to be a general administrative cost, which is a period cost, which is on the income statement what we would call an operating expense. President's salary. President's salary, period cost. Premium quality cotton material. Now, what are we making these garments out of? Material, like cotton, okay? And notice that they use the word premium there to denote that it's something that is a considerable cost, unlike thread, for example, right? We saw that thread is kind of I'm not going to say meaningless, but a minor cost. So direct material, how much do we have for that? $42,000. You know, you see me putting things in different columns. Don't get hung up on that, right? Don't get hung up on that at all. I'm trying to organize the answer as I'm doing it. And I don't even know if it's going to come out lined up the right way. You know, I'll deal with that later if I have to. But don't get hung up on things like that. Buttons. Buttons. Yeah, there's buttons on shirts, aren't there? And usually we can count how many buttons are on a shirt, right? Each shirt would have the same number of buttons. So now you're faced with that direct, indirect. Can you trace buttons to a shirt? Yeah, technically you can. But what do you know about buttons? The cost is very insignificant. That means it's indirect material. All right, so let me see if I can squeeze that in. So the buttons cost $750. Okay. Factory insurance. Again, when you see the word factory, if it's not direct material or direct labor, it is overhead, right? It is part of overhead. Look at the next one, depreciation on sewing machines. Where are sewing machines located? They're located in the factory. So again, if it's a factory cost and it's not direct material and it's not direct labor, it is overhead. Now notice that's different than the depreciation on the sales vehicles, right? Because the sales vehicles are a selling expense, they're a period cost. Okay, is that it? Let me see. Oh, okay, here's another one. Wages paid to cutters. Again, wages, we have to make a determination. Is it direct or indirect? Right now, supervisors, clearly indirect labor, right? A supervisor is clearly indirect. But this wage would be considered direct. So I'm going to put that right under here. Okay. So now I can kind of categorize and finish things a little bit, right? So we're going to say that direct materials, 42,000. Direct labor, 75 plus 50 is 125. Okay, now let's see. We can do this all as one category, right? We don't need to break it down into indirect materials and indirect labor. We can just say overhead, all the overhead together. So the direct materials were 42. The direct labor was 125. The overhead, 116,750. So what's the total manufacturing cost? It's 42 plus 125 plus 116,750. Total 283,750. What's the prime cost? The prime cost is direct material plus direct labor. 42, 125. Right, if I add those two things together, don't do it in your head like I was just about to. 167. What's the conversion cost? Direct labor and manufacturing overhead. Add those two together. See how easy this is once you understand the concepts? And the total period cost, add the three together. $118. So there you go. That's exercise 1-8, which is on page 37, which now you should probably stop and try to do the problems yourself. And the problems are so similar, you might want to try to do all three, or you might want to do them one at a time, whatever you think is better for you. Okay, so let's move on to the next one. And the next one is number, I believe, exercise 11. Exercise 11. All right, so it's a very similar type of problem. So this is E 1-11, and this is on page 38. All right, so let's see. You want to see it? Here we go. Following information is available for Wonderway. Here's your list. Looks very similar, doesn't it? Calculate each of the following: direct labor, manufacturing overhead, prime cost, etc. Okay, so let's do that. All right, so the first thing it was direct labor. Second thing was manufacturing overhead. right? And remember, that's always going to be a long one, so we should make some space for that, right? Then they wanted to know prime cost. And prime cost was what? Prime cost was direct material plus direct labor. And then number 4 was conversion cost. And conversion cost was what? It was direct labor and manufacturing overhead. And then number 5 was total manufacturing cost. And total manufacturing cost was direct material plus direct labor plus manufacturing overhead. And then number 6, period cost. Okay, so we've kind of outlined the topic, and now we can begin to answer the question. So let's go down the list. Factory rent. We know from the other problem we did that factory rent is part of overhead. So let's just write it in here. I'm just going to say rent to save a little space. 40,000. Advertising is a period cost. Right, and advertising is 20,000. Wages paid to laborers, classic example of direct labor. 82,000. Depreciation on the president's vehicle. President doesn't work in the factory, right? The president works in the office, and the office is an administrative expense. I'm just going to say depreciation. $8,000. Indirect production labor. Oops, where am I going? Okay, now that's overhead, right? And they're telling you it's indirect. Indirect labor, 1,800. Utilities paid for factory. $36,000. Production supervisor's salary. Right, now that's another form of direct labor. So what was this? This was just here. They said indirect labor. Again, just so we keep it straight. Say indirect labor. Production labor. And here we can say indirect labor, what did they call it? Supervisor. Right, and that was 30,000. President's salary. Remember, president doesn't work in the factory. Direct materials used. Nice, easy one. Now, they don't ask for direct materials per se, right? But don't they ask for prime cost? So we'll need to use it there. Sales commissions. Salesmen don't work in the factory, right? Or salespersons, sorry. Sales commissions. Because you can have both salesmen and saleswomen, salespersons, right? Sales commissions. Factory insurance is part of overhead. Insurance. Insurance. Okay, is there anything else? Depreciation on factory equipment. Right, that is still overhead, right? Depreciation. Where is the equipment located? It's in the factory. Okay. So what's direct labor? Direct labor is $82,000, plain and simple, just one item. What's overhead? Overhead, I'm going to have to add all of these together. Overhead is $145,800. Now, prime cost, direct material plus direct labor. Conversion cost, direct labor, and overhead. Total manufacturing costs, direct material, direct labor, manufacturing overhead. Add them together. And total period cost. Okay, so let me just go back and review with myself to make sure I got them all right. Direct labor was 82,000. Manufacturing overhead, 145,800. Prime cost, 116,500. Conversion cost, 227,800. Total manufacturing cost, 262,300. Total period expenses, 95,500. All right, so that is problem 11 or exercise 11. I'm going to fix something here because this is annoying me. I hate to be so. I'm going to call this E1-8, page 37, right? Because this, otherwise this thing follows me everywhere I go on the problem. All right, so here's your exercise 11. Nice, right? Nice. Okay, one more. Problem. Well, the exercises are usually a little easier. Problem 4. Okay, and problem 4 is in multiple parts. So when you first look at it, it looks very similar to what we just did. But let's take a look. I may have to go back here. Problem 4. Assume Susie Whitson has decided to begin production of her outdoor children's toy. Her company is Jiffy Set, and costs for last month follow. So this looks very similar to the other two problems we did. We have a list of the cost, right? And let's see how this could be different. First of all, the list looks a little longer. That's one. Identify each of the preceding costs as either product or period. If the cost is product, is it direct material, direct labor, or overhead? That's the first thing. The second thing, can you identify them as variable or fixed? Then they want the same kind of thing that we've done before. And then number 4, we don't have to answer. Number 4 is not in Connect. Let me just double check that. I mean, we could talk about it maybe, but we don't really have to do anything with that. Okay. So what we've got to do here, we've got to make a table. And let's see, how could we do this? First of all, I'm going to need more space. We're going to run out of room here. Okay. So this is PA. They call them PAs in this book. 1-4. And this is on page 41. So step 1, all right, part 1, let's create a table. And let's, in the table, list the cost, right? So let's say cost element. And then we have to decide, is it product or period? If it's product, is it direct material? If product, is it direct material, direct labor, or MOH, right? Manufacturing overhead? And is it, I'll do it this way, is it fixed or is it variable? I will just put an X. Okay, now again, when you're doing this problem on Connect, I think it's already pretty much set up like that. Okay. And let's just go down the list. Factory rent. Should we have another column for amount? I don't think the amount matters here. It will in the next part. So we have factory rent, advertising, um, uh, wages, assembly workers. I'm going to say wages, assembly, right? Depreciation, salespersons, screws, factory utilities, assembly, supervisor salary. Sorry about the abbreviations. So I got utilities, supervisor, sandpaper. President's salary. Plastic tubing. Paint. Sales, commissions. Factory insurance. Depreciation. Say depreciation, cutting machines, right? Abbreviating. Wages, painters. Okay, so let me just count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Okay, good. So we make sure we didn't leave any out. Okay. All right. So is it a product or period? By product, is it direct material, direct labor, or overhead? Right? So the factory rent is product. And we just said that it's overhead, right? Now, is rent something that's fixed? I'm just going to put an X. Yes, it is. Rent is fixed. Your rent is the same, right? Your rent is $1,000 a month. It doesn't matter whether you make 10 of these machines or 1,000,000. Now, that's another thing we should look at before we get too deep into this. She is making a toy, outdoor children's toy. So just imagine that. Just picture that. Imagine a children's outdoor toy. What that might look like, what it might be made up of. So when we go through these other things, we get a better idea. Advertising. Is advertising something that's product or period, it's period, right? Now, for something to be product, it has to be something that happened in the factory. Advertising doesn't happen in the factory. So we don't have to put anything in that column because it's not product. Now, is advertising fixed? Yes, advertising is deemed to be a fixed cost. I don't necessarily agree with that, but that's the way they want you to handle advertising. It's a fixed cost. Now, wages of the assembly line workers, definite product cost. And it's direct labor. And direct material and direct labor are classic examples of variable. Okay, so let's put an X there. Depreciation on the sales vehicles, period. And depreciation is always a fixed cost. Screws. Now think about a child's toy that's being held together with screws, right? So the screws went into making the product, so it's definitely a product cost. Product cost. Screws are another example of indirect materials. Indirect materials are overhead. And it's variable because the more toys you make, the more toys you sell, the more toys you make, the more screws you're going to use. Factory utilities. Product cost. It's overhead. And it's actually, utilities are what are called mixed, but they don't give you a choice. So you have to say that it's fixed. It's more fixed than it is variable. The assembly supervisor's salary. Works in the factory, right? So it's a product cost. Supervisors' salaries are not direct labor, they're indirect, which is overhead. And they tend to be fixed because you've got to pay the supervisor usually whether you make anything or not, unless you lay the person off. Okay, now sandpaper. Again, this is a children's toy that they're making. So sandpaper is used in that process. Okay, so again, it takes place in the factory, so it's a product cost. Is it direct material? Not really, right? Is it direct labor? No. So it's overhead. And it's variable because the more toys you make, the more sandpaper you will use. President's salary, definite period cost, and it's fixed. Now, plastic tubing. Plastic tubing is similar to the sandpaper, right? Except, well, you know, sandpaper isn't part of the product. The plastic tubing would be, but it's the same principle. It's a product cost, but it's something that I would call an indirect material. And it's variable. Paint. Now, sometimes paint is handled, you know, again, if you were making Maseratis and you had some kind of custom paint that cost thousands of dollars, you might say that paint is a direct material, right? But in this case, paint is something that would be indirect, right? So it's product and it's overhead and it's variable. Right? Now, I just want to correct something before we go on. I just noticed this plastic tubing. I was looking at the plastic tubing as something that was minor, right? And according to what I'm looking at, the plastic tubing is a major component of this toy that's being made. So if you look at the dollar amounts, right, you can see something like paint is relatively inexpensive, sandpaper is relatively inexpensive, but the tubing relative to the other costs is pretty expensive. And it looks like the main component of the toy is this plastic tubing. So the plastic tubing is direct material, right? It's direct material. I am sorry, it's direct material. Sales commission. Sales commission is definitely a period cost. And sales commissions are variable, aren't they? Because the more a salesperson sells, the more their commission is. Factory insurance, product cost, it's part of overhead, and it's fixed. Depreciation on the cutting machines. Cutting machines are located in the factory. That makes them a product cost. Depreciation is part of overhead, and depreciation is fixed. And wages that we pay the painters. Okay. Now, paint, look at the cost, $7,500. It's a major cost. It's product, and it's direct labor. And again, it tends to be variable because the more toys you make, the more you're going to have to pay your painters, right? So that's the first part of the problem. How do we define each cost? Is a product a period? Is it direct material, direct labor, or overhead? Is it fixed or is it variable? All right, now part two of the problem, we have to answer similar to what we did in the prior problems, right? So direct materials. First one is direct materials. And direct materials was the tubing, right? And that was $4,200, if I remember. And direct labor, we had two. We had the assembly workers, and we had the painters. And what did we pay the assembly workers? The assembly workers were paid $30,000, and the painters were paid $7,500, right? So that's $37,500 total direct labor. And what was manufacturing overhead, right? And we can just go down the list. We had rent. We had screws. We had utilities. We had the assembly supervisor. We had the sandpaper. We had the paint. We had the insurance. And we had depreciation on the cutting machines. $11,500. Okay, so we're moving along, right? The next thing they wanted was prime cost. And remember, the prime cost was direct materials and direct labor, right? So direct material was 4,200 and direct labor was 37,500. $41,700. And the conversion cost which was direct labor and manufacturing overhead, right? Direct labor was 37,500 and manufacturing overhead was 11,500, right? That we just calculated above. See how fast this goes once you get used to the terms? In the beginning, of course, you're going to have to stop and think and remind yourself and go back and look at the book or whatever. But in time, you get very good at this. The total product cost. Total product cost, which is the same as the total manufacturing cost, right? We can use those terms interchangeably, is direct material, direct labor, and manufacturing overhead. Oh, what did I do? Direct material, direct labor, and manufacturing overhead. So direct material was 4,200. The direct labor was 37,500, and the overhead 11,500. $53,200. Okay. Now the total period cost. The total period cost. All right, well, we're going to have to go back to that original list, right? Part one of the problem, and just go down the list. Advertising. Advertising was 1,000. What else? Depreciation on the sales vehicles, right? Depreciation, sales vehicles was 2,000. What else? President's salary. Whoops. Spelling shouldn't count in accounting, right? President's salary, 6,000. What else? Period. Sales commissions, sales right? We call that sales commissions, 1,200. That's it. That's it. Add them together. 10,200. 10,200. Okay. Total. Now here, I don't like this one. Total variable cost. Ugh. All right, so we have to go back now to our original, this part of the problem and say, okay, what should we do for the variable? What should we do for the fixed? You know what? I just had an idea how we could do it. Okay. So let's see. That's 3,200. That's the advertising, 1,000. Now let's see. If it's, they don't want you to count. Well, let's see. Yeah. Okay. This was what? 30. This is 2. This is 500. I should have done this from the beginning. Had I known this was one of the things they were going to ask me, maybe I would have done this. What else? The factory utilities. The assembly supervisor. The sandpaper. President's salary. Plastic tubing. Paint. Sales commissions. Insurance. Depreciation on the machines. And the wages we pay to the painters. See, the nice thing when you use a program like this, how it takes away a lot of the grunt work. So let's see. So the total fixed costs, I think I must have something in the wrong place. Let's see. 30,500. This 900, they say is a variable cost. Okay, and again, what's the rationale for that? Think about it. Think about it. The more toys you make, the more electricity you're using. Right? If you think of it that way. So utilities is not a fixed cost. Utilities is a variable cost. Okay, well, so you learn something every day. Okay, so that's part 1. This was parts 1 and 2. Okay, and this is part 3. Right, and actually this is part of 3 also, if you look at it this way, right? Okay. So total variable cost, total fixed cost, you would have to look up here to the way we handle this. Bold those so they stand out. This is also part of part 3, right? Now, we don't have to answer part 4. We don't need to answer part 4, but let's see if we can just, in a few words, explain. Suppose all period costs were incorrectly identified as product costs. What impact would that have on the financial statements? So if all the period costs were included in the product costs, how would that affect the income statement? Well, the net income wouldn't include this $10,200 of expense. So net income would be overstated by $10,200. Right? That's the effect it would have. But it would also violate GAAP, because GAAP says that what? That the product costs are part of inventory and the period costs are expenses. Right? So it would also, your asset inventory would be overstated. So inventory would be overstated and net income would be overstated also. So even though we didn't have to do that, that kind of answers the question. So that's all we have in this video. This is a part 2 of the introduction to managerial accounting. And I'll see you in the next video.